Hi everyone, this is Jordan here at Pure Elliott Wave. I'm going to be reviewing some gold charts from April 2024 with you today. We'll be looking specifically at the hourly charts, and I thought it'd be a good opportunity to really highlight some important Elliott Wave trading guidelines and how you can use our analysis moving forward to make profits. If you don't know, I'm actually a full-time trader, funded, proprietary trader, and I use only Elliott Wave theory, so I've learned a lot of lessons along the way with what to look for when taking profits and cutting your losses. In this situation here, we have an impulse wave on the 11th of April 2024. We had a really clear break from this consolidation area here. You actually could have drawn a nice trend line across the top coming down, and then we had three waves here coming down, and then three waves here for a lower degree. So breaking out of this consolidation higher, then I start looking at the wave count. And coming from the bottom of subminuet wave 2 here, I'll start counting and looking for 5 waves. And those 5 waves can nest together. So here we have 1, 2, 3, 4, 5 at a larger degree, but this third wave is also composed of 1, 2, 3, 4, 5. For a total of 9 waves up so far. So with this 9 waves up, I'm starting to look for a place to take my profits, and making new highs here, I would be doing so with such a good clean third wave higher, and expecting this third wave to end shortly into a fourth wave. Now let's look at the next chart. On the 12th of April, we actually had a bit more upward movement to around the 2427 area. Our last chart was around the 2400 area, and we had a bit more upward movement and then some downward movement from there. So we did have a third wave higher, moving back to the last chart. Third wave complete, now moving into a fourth wave. And when I look for a fourth wave and I want to see how deep that could potentially be, I know that the fourth wave cannot enter the price territory of wave 1, which is drawn here with an invalidation at 23.49, and the depth and length of that fourth wave could also correspond to the second wave here to exhibit good wave proportions. So expect that wave to potentially be almost as long as this, and it could retrace nearly up to 23.49. So we had quite a reaction from the top here on the hourly chart, retracing nearly all of the fifth wave at minuet degree. And we have a target moving down here around the 23.22 area for the Fibonacci 236 retracement, and further beyond that at 2258. Now we have updated the way we do our targets now with our new research, and you'll be able to keep an eye out for that in the CMT Journal of Technical Analysis. It should be released shortly. Now, fourth waves are notorious for their choppy variety, so mostly they retrace shallower than a second wave, and they're most likely to also be a larger variety of Elliott wave structures, including the flats and triangles and combinations as well. So it's no surprise here that our fourth wave ended up being very choppy and overlapping, with the initial move down for A, B, and C, and the structure of this made us suspect we could be having a double zigzag here due to the shallow depth of W, which is why we have W, X, and Y here, with wave W not even retracing the 236 retracement. Overall, this short-term series of charts shows how to identify the end of a third wave based on some wave counts, and then taking profits and preparing for a fourth wave overall. You can use that invalidation that we provide, and then you can expect further choppy consolidation, especially in fourth waves at larger degrees. To conclude here, I'll show you the daily chart. What we were looking at was the 11th of April 2024 with our final third wave complete, going into a fourth wave position here, and then resuming higher, the bull trend overall. So some choppy sideways movement for that fourth wave, which is why it is my preference when I trade to try to get in for the second wave positions and capture that price movement for a third wave That second wave could be a second wave going up for a fifth wave, or the second wave going up for a third wave. Because either way, you're entering the third wave either in a fifth wave position or in a third wave position. Really depends on my time frame, and I usually like to trade all time frames from longer term trades to very short term day trades as well. So that's everything for me, Jordan here at Pure Elliott Wave. Hope everyone has a great day and good luck trading out there.